February 28th, Wednesday. As we do every day, we'll look at the monthly. As we've only got today and tomorrow left for the monthly, we can start kind of anticipating, a relative close or a possible area that we think that the market might close at. We want to be kind of just cognizant of that. We can see last month's range, um, still, fairly decent ways away. So most likely we will get a +4 monthly bar here, and most likely we will not have cessation of one time framing. So definitely want to be paying attention to that. Um, we did get GDP today, didn't really move the market too much. And we are trading a little bit lower. You can see 50.76, and the close yesterday was actually 50.90, so a little bit below that. Switching over here to the weekly, you can see the weekly remains inside the previous week's range. So this is basically the range that we continue to monitor, and that's down from that 49.59 quarter up to that all-time high of 51.23 quarter. Of course, the close from last week was 51.01 half, and the open 50 quarter, or 50.2575 being the open down here. So definitely some levels to pay attention to. Still pretty ways away, pretty decent ways away from last week's open. On the daily, you can see we are one time framing lower now. So it's kind of your first sign of change, right? Typically, I like to wait for the weekly to give me some real information. The daily can be kind of dramatic and kind of lure people in, right? We had one time framing down right here as well, and then we saw what happened. The market went to the new all-time high. So I like to personally wait for the weekly. We do have this rather large gap still here. Be able to see it a little bit easier on the profiles. But the market traded down yesterday, that 50.66, for the most part, the exact level that we were talking about, the previous all-time high, and caught a little bit of a bid and actually finished as a green day, as you can see here, a little bit positive. No -4 or +4, so just a neutral day, as the settle was higher than the previous day's settle. So we can kind of assume, based off of this, that if the market is unable to kind of find acceptance below the 80 today, then there will be some short covering, or should likely be some short covering, to clean up some of these momentum sellers that are in the market from the 26th. And then for those tacticians out there, you've got the 9 EMA at 50.55, so that's something to pay attention to. And then something I was looking at this morning, if we look at our trade chart, so like these are just for the 0 DTE options here. You can see a lot of trades happened way down here, 49.65. That's 100 points away, so kind of out of the realm of things. But you're getting a lot of trades here, 50.55, and this on the put side, and 50.60. And if we look at these, you're seeing most of puts being traded at the ask. So a lot of buying of puts and a lot of calls trading at the bid. So a lot of selling of calls. So when we switch back over to our option chain, just for our 0 DTE purposes, if you figure these calls are getting sold and puts are getting bought, so a lot of people buying 55, and this percentage here is just the percentage of volume times, or divided by the percentage of open interest. So volume's 200% more than the open interest. And so we can see over here a lot of calls, 50.90. So a lot of call selling overnight, probably. Well, obviously, a lot of call selling overnight on the way down. And you see that big one, 51.05. Another big one down here, 51.55. So another 100 points higher. But so it looks like a lot of call selling and a lot of put buying. Just kind of an interesting look that I was observing this morning, thought I'd share. Switching over here to the profiles, we can take a little peek at yesterday, do a little bit of review here. Um, so yesterday opened up, and remember we had some of these mechanical references from yesterday identified, right? Had these mechanical references saying short time frame sellers had kind of taken over the market, and if the market is going to catch a bid, it should stay above the 80. 80 was our settle yesterday. Oh, 80's down here actually. 80 was our settle yesterday, and the target would be these levels up. Well, we opened up, you can see here, opened up, and then pretty much traded lower below that 80, a little bit of back and forth, B period inside of A period, and then C period, one tick below B period, D period, one tick below B period as well. And then finally got the break as the market just became too heavy. And as the market broke down, traded to that 50.66 level. Actually, 50.67 was the low, but close enough. And then shorts started to cover. So they put in a lot of effort here around this 40.80, 50.80 level. And that's why I'm saying today, if they can't hold it below this 50.80 and they start to get acceptance in this upper distribution of the Globex range, well, that would possibly trigger some short covering, and that could bring us back up to these levels here. So we've got like 93, 97, the 5100, and then the 04 level as well. So that's just something to, just to remain aware of as far as the market goes, right? Just in the bigger picture. Yesterday we did have a balanced day, with excess on both sides. We did finish outside of value, so above the previous value, and finished on a spike to the upside. And typically that's a price exploration. So buyers tried to peek back in to previous value here. And then we get this rejection overnight. So typically spike rules are going to tell us that these prices are rejected and the market still needs to seek lower for fair value. And with that, we want to be basically treating this as resistance, but we're still going to be kind of implying our normal rules today. So it's looking like most likely we're going to be breaking value area low first. And that's really the downside that we're going to want to be playing unless we see the market get acceptance above the 80, right? Today, the 80 is really just going to kind of be our line in the sand. We can go ahead and kind of mark that here. An LIS, line in sand, that's the abbreviation for that there. But that's basically for me where I don't want to see the market above if I'm going to be short today, or if we are going to develop value lower, which is looking like most likely the case, but anything's possible. We'll definitely have to wait and see. Above 80, the market starts to get a little bit off sides, and I think these sellers get a little bit overdone, and they start attacking some of these weaker sellers up above, or some of these weaker sellers up above start covering shorts, and that can bring us back to that very round number of 5100. So just something to kind of be aware of there. So as far as the plan goes today, really what I'm looking for is I'd like to see us really stay below this area here, this like 77 to 74 area. And that would be kind of the ideal area, I think, to look to get short. And first attack zones that 50.66. I'll draw this backwards. 50.66. This up here, because that's that previous all-time high, right? And then from there it gets a little bit kind of dicey. Maybe we get a little bit of back and forth. If we get back below that Globex low and start to hold, then I think the sell pressure starts to kick back on, and the target becomes that gap high, which is 52 quarter. Now, like I said, I think there is some cautionary longs here, above this 80. If we start to see a little bit of a bid here, from like the 80 to the 84, then you do get kind of that opportunity here to really look for, what's the deal here, to look for that move back towards the settle right? Yesterday's settle. It's also the overnight point of control. And then also yesterday's high. So you've got like that 92 to 90 area. And then we have these weak references up here. And that's that 5100. So just a very mechanical level as far as that goes. Um, the biggest thing today, I think, is going to be this 80, right? 80 is going to be kind of our line in the sand. I'll just write 50, 80 would be the sand. Careful. How do you spell it? Careful for short cover above. So careful for short covering above that 58.80 level. But other than that, right, like the downside is still in control. So should we get up here, let's just snag a screenshot of that real quick. Should we get up here and fail to get that continuation to the upside, similar to how we did yesterday, right? So let's say we do get above the 80 and we start to get some longs, but we fail to get a cessation of one time framing. That can be an opportunity for us to fade the market back down to the 80, which seems to be kind of developing as a center of gravity here, and really kind of shows acceptance in this lower distribution. If we jam all these levels together, you can kind of see we're forming this. We talked about this area yesterday, right? One larger distribution. Well, we kind of filled in this area down here, and then you see basically the 76 area to this 80 level is, you know, like a ledge here, a lot of volume coming down. So if we continue to bring in volume lower, it's going to be showing acceptance of prices lower, and could just mean that all of the people that were long from below have taken their profit, right? Taken some profit here, taken some profit here, and then the market can go lower to either find new buyers or to liquidate some of these momentum buyers that have been trapped up into this upper distribution. Hey, Jason, I appreciate it, man. Thank you. And that's kind of where I'm kind of looking, right? We still have excess. We've got excess 3 days in a row, as far as these profiles go. So definitely something that you want to be paying attention to, um, right? And like I said, that's not that you couldn't take a long above the 80, but if you do take a long above the 80, that doesn't give us a cessation of one time framing, and really doesn't clean up all the way to this 04 level, in my opinion. Then the downside is still in control because excess in this distribution up here is still kind of holding. So we're playing like a gap here, single prints, versus this larger gap here, and value's just been kind of developing lower every single day. So even if we do get this move higher and get a cessation of one time framing, really failure to find acceptance over this larger distribution and back into that upper range that we talked about yesterday when we combine the profiles is telling us that the market might need to trade a little bit lower. So we just need to be just aware and pay attention, right? We don't want to get any bias going. Morning, Dan. Don't want to get any, one-sided, because there's obviously going to be two sides to every story, but just something to think about in the big picture. Now, I'm not saying we won't, right? So it just goes up. Well, let's just keep shorting it because it could go up, could find acceptance, and could continue going up, right? We have to kind of make that decision when the time gets there. That's the beneficial part of being a day trader, is that we really don't have to make these future decisions, but what we can do is lay them out to get our imagination working and kind of foreshadow or figure out what may happen and give us a little bit of insight on how we should react to it based off of what we think might happen. That way we're a little bit more prepared, right? It's hard to be prepared for something that hasn't happened yet, of course. You get in a fight and you're expecting the guy to throw a jab and he throws a cross first and you go to slip it, but you went to slip the jab, you slip right into the cross. So it's similar to that, right? I mean, we've got to be kind of paying attention, watching the shoulders, right? Oh, there comes the cross. I got to slip the other way so I don't get caught. Yeah. Other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan. Remember, tomorrow is the last day of the month. So we're going to have some nice, interesting closure, and then we'll get to play against the +4 monthly level, which is always exciting for me. Yeah, you guys have a good day. I'll catch you guys tomorrow.